different, the platforms look modern, the coin names keep changing, but the outcomes remains exactly the same. People were losing money years ago, they are losing money today, and most people will continue to lose money in the future. Not because crypto is a scam, but because human behavior never changes. Crypto markets are not chaotic, they are structured around psychology. Every time prices move upward, confidence slowly turns into greed. Every time prices move downward, fear replaces login. This emotional cycle has existed long before crypto. It existed in stock, it existed in commodities, it existed in real estate. Crypto only exposes it faster. Most people enter crypto without understanding what they are entering. They don't come to study system, they don't come to learn risk. They come because they see money being made. Screenshot profit post success stories. When they don't see are the losses behind those stories, they assume opportunity means certainty, and certainty in the most dangerous elegance and financial market. The market does not reward intelligence, it rewards discipline. This is why even smart people lose money. They are overreact, they are overtrade, they confuse moment with progress. Buying and selling feels like action, but action without direction is expensive. If you look at market history, one pattern never disappears. The early phase is quiet, nobody is interested, there is no excitement. Then price slowly moves, confidence builds, narratives are created. Suddenly, everyone understands crypto. Suddenly, everyone is an expert. That is usually the moments risk is highest. People don't buy value, they buy confirmations. They wait until everyone agrees and buy, then the market has already moved. This is why most people buy late and sell early, not because they are unlucky, because they follow comfort instead of login. Another reason people lose money in impatient. They want result quickly. They expect markets to move on their schedules, but markets don't care about personal timelines. Impatience creates forced decision create mistakes. Something the most professionals mob is to do nothing, but doing nothing feels uncomfortable, and discomfort is something most people avoid. Volatility is not the problem, poor preparation is. Many people enter position without understanding risk. They don't decide in advance how much lose in acceptable. So when price moves against them, emotions take control, fear forces them out at the worst moment, greed pulls them back in the at the wrong time. This cycle repeats until capital disappears. Another silent issue is information overload. People consume too much content and too little knowledge. They jump from one opinion to another, one prediction to another. But market don't move on opinions. They move on liquidity and positioning. The loudest voices are rarely the most accurate ones. Most online content is designed to attract attention, not build understanding. If something is everywhere on social media, it usually means the opportunity is already crowded. Real accumulations happens quietly without excitement, without noise. Micro conditions play a bigger role than most people realize. Interest rates, liquidity, inflation, and global market influence crypto behavior. Ignoring these factors create unrealistic expectations. Markets move when money moves, not when hope increases. Those who understand this stop chasing every move, they start waiting for conditions. Are common mistakes creating crypto like a lottery. People look for shortcut, they search for fast outcomes. But crypto is not about speed, it is about survival across cycles. Those who survive long enough eventually learn. Those who rush usually disappear. If you study past cycle honestly, you will see the same ending again and again. Different coins and different narratives, same psychology. The market does not need to change because people don't. This is why most participants lose money, not because crypto is broken but because behavior is predictable. Crypto does not punish beginners, it exposes unprepared thinking. Those who slow down, learn subtraction, and respect risk stop reacting emotionally. They stop chasing noise. They stop trying to be the right all the time. They start thinking probabilities instead of predictions. And this is the real differences between those who survive and those who don't. Not intelligence, not luck, but behavior. If you want to clear professional research based insight about crypto markets and money without hype and without false promises, make sure you subscribe to the channel. Thanks. Hi everyone, welcome back to the channel. Today we are diving into one of the most fascinating and overlooked metals in the world, silver. It's a metal you see everywhere in jewelry, in your phone, in solar panels, but it is also an investment asset that can shape financial markets. And when you look deeper, silver is not just shiny, it's essential for both modern technology and the global economy. Silver has been a part of human history for thousands of years. Ancient civilization used it as money for trade, for act, and even for tolls. It was considered a symbol of wealth and power, much like gold. But unlike gold, silver is far more than a decorative or monetary assets. It has critical industrial uses that keep the modern world running. In fact, more than half of the world's annual silver demands comes from industry. That's because silver is the best electrical conductor among all metals. It transfers heat more efficiently than most materials and it has natural antibacterial properties. These quantities all make it indispensable. It's used in smartphones, laptops, and tablets. Essentially, every device that connects us. It's a core material in solar panels, powering the global clean energy transition. It's found in electrical vehicles, medical instruments, aerospace technology, and even in systems that purify drinking water. In other words, without silver, a lots of technology we take for granted simply could not function. But silver is not just about technology, it's also financial assets for centuries. People have bought silver as a way to protect wealth. Investors today still rely on it as hedges against inflation, currency devaluations, and market volatility. But makes silver unique is that much cheaper than gold, yet historically more volatile. This volatility creates risks but also big opportunities. When silver rallies, it often rises much faster than gold. That's why many investors see it as the people's precious metal, affordable, accessible, and with the potentials for outsized returns. Silver can be both as physical coins and bars through exchange traded funds by investing in mining companies or even by trading futures and options. When comparing silver to gold, the difference is striking. Gold is primarily held by central banks and used as a store of monetary values. Silver, on the other hand, plays a dual role. It's both monetary and industrial. Because of this, silver's price can swing more dramatically, reflecting changes in both investor sentiments and industrial demands, a key metric that investors watch in the gold to silver ratio. Essentially, how many ounces of silver equal 1 ounce of gold? Historically, this ratio sits around 60 to 1. But silver bull markets is dropped sharply, signaling stronger outlook for silver related to gold. Looking ahead, the future of silver looks increasingly bullish. Global demands for clean energy is exploding, and silver is a critical material in renewable technologies. Electric vehicles production is climbing rapidly worldwide, and each EV requires far more silver than a traditional car. Green infrastructure for small grids to energy efficient building depends on silver based technology. At the same time, winning and recycling are not keeping up with this demand, creating the potential for long term scarcity. This imbalance between growing demand and limited supply is one of the strongest arguments for higher silver prices in the year ahead. So, whatever you are interested in technology, sustainability, or investing, silver deserves a serious spot on your radar. It's metal with a unique story, one that combines human history, modern innovations, and financial strategy, and has the world moves towards a greener and more digital future. Silver's role will only become more important. Thanks for watching, and if you enjoyed this breakdown, make sure to like the video, subscribe to the channel, and hit the bell icon for more in-depth insights for money, metals, and market. Thanks.